Nick, will the 20% HECS deduction be applied before or after current financial year repayments are applied? So Anthony and the Labor Party are back. They've said we're going to wipe 20% off everyone's help debt balance. When are they doing it?
So the tax office are going to apply this 20% reduction to all the training and study loans that are there as at the 1st of June 2025. So Parliament is meeting on the 22nd of July to introduce this legislation. If that gets passed, then they will apply that reduction as of the 1st of June. So it's really about the amount that you want to repay or that you have to repay is based on your taxable income at 30 June. And therefore, it's applied after you lodge your tax return, which, you know, if you want to get the maximum benefit of this 20% reduction, then probably wait until after 1st of June to make any repayments, because 1st of June is when the reduction is going to be applied to.
Yeah. But the thing is as well, with these type of things and with when they change the index rate from just CPI to the wage price index or CPI, whatever's lower, they backdate it anyway. So I don't think you need to be that worried.
No, and look, it all comes out in the wash eventually anyway. Again, if you've got additional funds available, it's about the question, do I make a repayment? Because that's going to reduce effectively the interest, which is like this indexation.
Yep.
What's your cash flow like? There's other factors that need to come into it as well, rather than just trying to beat the tax office all the time.
100%. Chris asks, can you claim work-related education expenses like short courses?
So this is a bit has been a bit of an issue in the past, because people think that you just do a course and you can claim it. But you actually need to meet some criteria in order to be able to claim things. So you can claim it if the course that you want to do maintains or improves your current skills or knowledge, and it's likely to lead to an increase in your current job. So it needs to be related to your current role and not a future one. So
Chris could be a metal fabricator and wants to take up hairdressing in 3 years' time.
Yeah.
Don't do a hairdressing course now and think you can claim it on tax.
Exactly. But if you're a marketing coordinator and you do a short course on how to do advanced digital marketing, that is related to your current role, so that is okay. So it's really looking at, well, what am I currently doing? And is this course related to an increase with this current job? So you can't claim it, though, if it's intended to help you get a new job or to start a business, which seems a little unfair because, you know, you need to do some training to be able to get a new job.
Chicken or egg.
Yeah, exactly.
What did come first? Did we ever work that out?
I've got no idea, but
All right.
It's a good question though, isn't it? Because it is really hard. How do you get yourself into getting a new position if you don't first do the courses? But the tax office and the way that they claim deductions, there has to be this nexus between what it is that you're earning, and you can claim anything that relates to generating that income. So if you've incurred it in producing that income, then it's a deduction. But if you haven't actually earned any money in that space yet, then you can't claim anything in relation to that.
I've actually got a good idea if people want to upskill in their current role. And I said to my team the other day, we had a team week, and I'm like, all right, if you want to do any course, you research it, provide me with the details. So if Sean wanted to do an advanced Premiere Pro or After Effects maybe not so much After Effects, or insert course here, send it to me. I'll have a look at it. If I think it's beneficial, me as the employer, I'll fund it, number one. Number two, I'm happy to do that if it's reasonable. Like if it's a $10,000 thing, probably won't. But it is a way that people can look to extract extra value out of their position if pay rises aren't on the table, because there could be L&D budgets available. So 1, can your work pay for it? Number 2, can you strike a deal with your employer? Hey, I want to do this course. What about if I pass, would you reimburse me? Or if I pass, we'll go halves.
Yeah.
So, and then that removes, well, if they fully fund it or reimburse it to you, we don't have to claim it.
Exactly. And that's one of the criteria too. You can't have somebody else pay for it and you claim it. You need to pay for it if you want to claim it as a deduction.
And as a business owner with employees, it hurts my little soul a little bit that if I was thinking my team were paying out of their own money to do a Premier Pro course,
that's going to benefit your business and improve.
Where I'm like, oh, can I just pay for it?
Yeah.
However, this is where it gets interesting. If I did pay for a course and someone wanted to do it and it was development and it was $2,500–3,000 course, I would literally have some strings on it. Like, I'll do this, but if you resign from your role in the next 18 months or 2 years, I'm clawing half of it back or something like that.
Exactly.
Because it's an investment. So
Yeah.
it is a dance. So I just thought it's an interesting thing there.
Yeah, and I think it definitely, I think when you get those really good employers that are wanting to support and help their employees get the best out of them, because when employees are happy and they're engaged and they're learning, it's going to be beneficial for your business too. But there has to be that trade-off. So,
yeah. And I guess if it's a business when there's like no budget for it and you want to work on your career, on one hand, my soul hurts that, can't the business just pay for it? But also amazing that you've taken the initiative, you've invested in yourself, because the best thing you can do is invest in yourself, upskill, sure, grab the deduction along the way, then bounce into the next role.
Exactly.
The current role that you're at might not be it. Okay, super is a super duper thing. Here we go. Joe, should a 17-year-old earning around $1,500 a month voluntarily contribute to super to get the co-contribution from the government?
Yeah, so super is a beast all by itself. And yes, it could be beneficial. So,
hey, it's Glen here. Thank you so much for watching today's video. You made it to the end. Can I ask a favor? Can you hit that like button and maybe hit subscribe if you want to get notified when we release further videos just like this one, whether you watch the Money, Money, Money podcast or Retire Right. And remember, if you want to learn more about investing, I've got an investing book, The Quick Start Guide to Investing, and there's a link in the description to get your hands on a copy. Thank you so much. Bye.